Investing is frequently advertised as a quick ticket to riches and a carefree life. The ads and glowing success stories often make it sound like anyone can hit it big with just a few clever choices. But the truth isn't quite so simple. There are some hard-to-swallow facts about investing that everyone should know before jumping in. In this video, we're going to dig into those truths to help you become a smarter investor. By confronting these realities head-on, you'll get a more honest, down-to-earth view of what investing is really about. And with that clearer perspective, your chances of success will greatly increase. Welcome to Sage Investing, bringing you timeless investing wisdom. If you're looking to improve your investing knowledge, make sure to subscribe and hit the like button if you found this useful. No matter when you start investing, you'll probably wish you had started sooner. It's just one of those things you'll need to accept. Unfortunately, many people don't realize this until they've missed out on years of potential growth. Time is one of the most crucial factors in building your investment portfolio, and nearly everyone regrets putting it off. Even those who start investing in their 20s often wish they had begun sooner, despite having a great head start on building wealth. For those who wait until their 40s or 50s, the regret can be even stronger as they realize how much growth they missed in their younger years. Trying to make up for lost time is incredibly difficult. It often means contributing a lot more money than if they had just started earlier and let their investments grow. With typical stock market returns, investments tend to double roughly every 7 years. So every year you delay makes a big difference. If you're like most people, it probably feels like you never have enough money to invest. With so many other expenses competing for your attention, setting aside money for investing can seem nearly impossible. And let's be honest, investing doesn't always feel thrilling, especially in the beginning, when the returns are small and don't seem to amount to much. It's always more tempting to spend on fun things like vacations or dining out. But those who are willing to make sacrifices and cut back on non-essential spending are the ones who will reap the long-term rewards. Even as your income grows, you might still feel like you don't have enough money to invest if you keep prioritizing short-term pleasures. The key is to start investing as soon as possible, regardless of that feeling. You may never feel like you have extra money to invest, so you have to make the choice to invest some of what you have anyway. The sooner you build that habit, the better your financial future will look. A lot of people put off investing because they're waiting for the right time, maybe for the economy to get better or for interest rates to come down. But here's the truth. There will always be something uncertain or worrying on the horizon. Just look at the last 5 years. We've seen countless events that caused concern, from minor hiccups to major disruptions. Thinking that the future will be any different is simply unrealistic. In fact, uncertain times can often present great opportunities for investing. When things are unpredictable, markets can be volatile, which opens up the possibility for both gains and losses. This volatility can actually help keep investors grounded and stop them from becoming overly optimistic. Rather than letting uncertainty keep you on the sidelines, focus on evaluating the risks, making informed choices, and understanding that there will always be something to worry about. No single investment strategy will consistently beat the market over the long haul. A strategy that looks like a winner today might not hold up tomorrow. Take real estate, for example. It saw huge gains from 2020 to 2023, and suddenly everyone wanted a piece of the action. At other times, people have rushed into Bitcoin or tech stocks. But the truth is, no investment trend stays on top forever. This is why it's so important to avoid shiny object syndrome, where you chase after whatever is hot at the moment. Markets are cyclical, and what works well in one period might fail miserably in the next. The key is to diversify and stick to a well-thought-out investment plan. By staying disciplined and not jumping from one strategy to another based on short-term trends, you stand a much better chance of getting steady, sustainable returns in the long run. When your net worth takes a hit of 20% 30%, or even more because of a market downturn, it can feel like all your hard-earned progress has disappeared overnight. But this isn't necessarily a financial crisis. Market ups and downs are a natural part of the investing landscape, and crashes happen periodically. On average, the stock market drops by at least 20% every 5 years. As long as you have a steady income and a solid emergency fund, a market slump shouldn't send you into a panic. Sadly, many people do panic and sell off their investments during these downturns, cementing their losses instead of waiting for a recovery. While a falling market should remind you to be careful, it doesn't have to spell disaster if you're prepared. Remember, these losses are often just on paper, not in your actual financial life. Just because your investments do well for a short period, it doesn't mean you've suddenly become a genius at investing. When the market is on the rise, everyone seems to make money. A rising tide lifts all boats. Seeing your portfolio grow quickly over a few months or a year doesn't make you a professional investor. Many people mistakenly believe their gains are due to their own clever decisions, when in fact, it's often just the overall market going up. Short-term wins don't mean you've struck gold, or that you can count on those gains continuing. What truly matters is how your investments perform over the long term. The market will always have its ups and downs, and a brief period of high returns doesn't guarantee lasting success. To build sustainable wealth, it's important to keep a level head, reinvest any gains, and stick to your investment plan. Letting short-term success tempt you into impulsive spending can undermine the power of compound growth and derail your financial goals over time. Investing isn't the simple shortcut to fortune that it's often made out to be. There are some hard truths that every investor needs to grasp. By confronting these realities head-on, you'll gain a more realistic view of what investing truly involves and boost your chances of achieving real, lasting success.